Hello, Maurice here. Welcome to Tanks Invest, where we're going to be talking about investing, finance, and professional development. For today's videos, for entertainment purposes only, the stock that we're going to talk about today would be NIO, ticker NIO. As you know, across the board for a lot of the small cap EV growth stocks, there's been experiencing a lot of sell off recently in the last couple quarters and the couple months and weeks so far. It's just been a bloody time period so far. And with respect to NIO being the forefront and as the premier EV representative stocks that's in the industry, it's been just getting killed left and right. And it's been down ever since from the $67 level down to now trading around like the $30 level, which is a significant sell off of close to 80 something percent so far. And recently, as of today, we see that the stock has actually breached the resistance level that has been forming at the $35 level, which is, to me is a little bit worrisome, knowing the fact it's now forming an outlier to the trend that's been forming so far. So I'm going to go through a technical analysis to see where I see the stock going from here. What are the further resistance level we should be looking out for if you think about investing into the stock in the coming days and in coming months as well. And also, what's my price and target for year 2020 as well. So stay tuned, stick around, let's make some money. Alright, so take a look at the technical chart for NIO right now and look at this on a daily perspective, which is the best chart to look at if you try to look at the forecast and the fundamental analysis based on the quantitative charts that we have. So just look at the chart right here. You can see that ever since last year, we rally up all the way from this $21 level all the way to the $67 level because of the whole, Q4 pump, driven by, Tesla with some correlations, but also with respect to just like the massive euphoric pump that we experienced last year. And ever since then, we sold off completely from the ever since Q1 and Q2 because of the chip shortage, because of the sector rotations, because of tax season, and also because of the latest, activities and development with respect to the tax adjustments that Biden's proposing for corporate tax and also for capital gains tax, and also with respect to the just the foreign exchange momentum with respect to the monetary policies, the import export rate, and also the trade tension that we also been experiencing between U.S. government and the Chinese government, which subsequently drove off the stock all the way from the $60-ish level to to the bottom right here at the $31 level, right? And ever since then, we've been kind of consolidating up and down, up and down, up and down, driven by mostly the CPI report, but also with respect to like some of the latest developments with respect to the administration for the tax adjustments, and also like the Federal Reserve speech that occur like on a weekly basis with respect to monetary policies, and the Chinese and U.S. trade tension that is also developing going forward, right? So it's kind of building this like kind of an emotional roller coaster so far, which we have sustained ever since like the March crash, all the way now. We've been just kind of floating left and right, left and right. But however, in the recent time, as of today, May 13th, and yesterday, May 12th, we see that we broke the resistance level down below from the $35 level. Now is trading at like the $35 level, which is to me is a little bit worrisome because we are breaking an outlier trend at the moment. So right now, what I see going forward is that we are going to be retesting this level right here. I mean, just move the chart a little bit, which we are. We are going to be testing somewhere around like the $32 level, which as we speak right now, we are testing this level at the moment, which I see that we should be, experiencing some sort of like a rebound slowly. Bounce back up. But if we don't, the next resistance level that we're gonna be seeing is somewhere around like the $30 level, which you can see that at the red candle right here before the pump up. This was basically like a retest of the $30 resistance level, which is more like a psychological level. Like any numbers that are flat numbers, typically investors look at as like a good price point for them to either sell or to get into. And because of this is a more of a reverse psychology perspective, this is going to be more of a resistance level that's going to be forming in the near future. So what the next level to look out for, which we are basically closing in on, was the $30 level, which if you to buying at that level would be just a steal, knowing the fact that this stock is so highly oversold on both RSI perspective, but also on the MACD perspective. You can see that it's just like too much, man. This is too overreacted, and people are just running for the hills or being fearful for a lot of the negative media affectations, right? And when there's so much depression, so much negative, angry affectation that's going on in the stock market, that's when the hedge funds, the big whales, are gonna come in, and they're selling off, and they are pushing this stock down with the low supply and low demand that's going on right now. And that's exactly what the hedge fund managers want from us, from retail investors, to sell so they could get it at a cheap price. So for now, if you were to have some cash on the side right now, or if you think about dollar cost averaging, right now is the perfect time to buy. You should be extremely greedy when people are being fearful. Hedge fund managers always think this way. They think the opposite of consumer retail investors, and that's exactly the mentality that you need to adopt. You should not be scared of what the media tells you, because again, the media affectations are mostly controlled by hedge fund managers, knowing the fact that they are controlling most of the publishing companies, and they have a strong control in terms of how they want to perceive a certain companies in the media perspective, which subsequently feeds us information to convince or influence how we trade in a monetary market, right? So something to look out for, right? So again, the next resistance level is going to be $30 level, and if we break that again, right, which I foresee that to be highly unlikely, it'll take like a huge rock for you to crack the $30 level, or a huge fire truck for you to run through this shit. So if we go down, you will go down all the way to like the $28 level, which you could see that we had that green candle once. So at the bottom of the green candle is going to be somewhere around like the $28.50, $29.50 level. Again, highly unlikely, because again, the $30 resistance level, like you see that we formed once, we formed twice, we formed fourth times right here, 3 times right here, and fourth times right here. That for us to get there is going to take some seismic adjustments for us to get there, knowing the fact that we have sold off so much already. So for us to get that even further down, it's going to take a lot of drag. It's going to take a lot of inertia on all sides. So unlikely, and definitely right now is a huge discount based on just the quantitative analysis that we see here. Highly oversold, highly overreacted. It doesn't make sense anymore in terms of the valuation. It's trading too low. That buying now and hold it for the next 1 to 2 years, 3x, 5x your money, very possible, very likely, in my opinion as well. Alright, so just quickly check tip regs real quick. You can see that with the 10 analyst rating with 7 buys and 3 holds. Overall, Wall Streets are very, very bullish on this stock, like myself as well. In the next 12 months, I think $60, with a 92% of an upside, if you buy now, is a huge possibility of that happening. And if you're even more bullish, and I think I am actually a little bit more bullish than the $81 on the high spectrum, I actually foresee this going to be somewhere around like 85 or even possibly 110 going forward. That's going to generate now like 125% of a return of an upside for you, right? And if you're buying on the low perspective, right, 38.80, which is still higher than what's currently being traded at right now. So again, right, overall highly oversold in terms of the technical analysis, in terms of Wall Street consensus. It's just that people are freaking the hell out, selling and oversold their shares, and I think it's because of the margin that they have been sustaining, that they had just have to sell to prevent like a margin call or something like that. But nothing really has to do with the business fundamentals, and nothing really has to do with the growth of the business going forward, right? So highly oversold, highly overreacted, great discount for you to buy in right now. And just look at the price target for myself. My price target, if you buy it now at the 31.50, I think that's oh my god, it's a steal. And I'm buying still, over and over again on every single dip, and I continue to dollar cost average down. And these are prices that you probably might not even see again. I promise you're not gonna see the same price in like a year from now. You're gonna laugh at these numbers, right? But right now, in terms of the resistance level 3150, that's like the first one, which we are already currently testing at the moment. And the next one is going to be somewhere around the psychological resistance level of $30, which is, again, that's just like a flat number people look at. And if you even get further down to like the 20s again, which is like, God bless you if that happens. 2875, that's like the next resistance level before we pumped up all the way to the 35, back in like Q4. Q3, Q4. So that's like a great price point for you to get into, right? And if you're buying at the $31.50 level right now, $85 by year end, 12 months from now, will give you about like 170% of an upside, or close to 3 times your money, which is extremely impressive gains, Alright, so that's it for today for NEO ticker NIO with respect to this technical analysis and some of the quantitative research that I've done so far. Hopefully you guys appreciate the insights and some of the commentaries I provided for you guys to look out for. And please again hit the like button, the subscribe button, that notification bell as well. And hopefully you guys find this helpful, and please stay tuned for the next video. Thank you so much.